And good afternoon. Welcome into Market Talk for this Wednesday, March 2nd. Thank you so much for joining us, making us part of your day once again. I'm your host, Jesse Allen. And again, thanks for joining us on this Wednesday. Find us online. MarketTalkAg.com is our home on the web. All of our social media links there, our streaming sources, everything you need to know about the show, and also all the latest news of agriculture and more. It's all online. MarketTalkAg.com. Well, we take a look at the trade today. It wasn't sharply higher in everything, although we did see wheat to move higher again. But lots to talk about in these volatile markets, and we're going to do just that. We're going to talk about it all with our good friend Bryan Doherty of Total Farm Marketing joining us this afternoon. Bryan, great to have you on, sir. And the last couple of days with everything going on in the world, these markets, it has been a very volatile, crazy ride, and I'm sure that many maybe sleepless nights for for many traders and farmers alike the last couple of days, Bryan.
Yeah, what's interesting, it's interesting to say that because on the one hand, it's so volatile that I think we're somewhat becoming accepting of what it is. But that's kind of easier when you're talking to corn and soybean producers that when the market's trending higher. Now, if we were just crashing like this day after day, it'd be a lot different. But I spent a lot of time talking with those producers, um, and they've got good questions. So it's a lot of valued time to just talk about strategy, talk about where things are going. Potentially, we're in uncharted waters. Jesse, you talk about 14-year high wheat prices today. You talk about, a Ukrainian crop season similar to ours, maybe a little earlier on the corn planting. What's that going to look like in 6 weeks from now? And what do the logistics look like now to align that to happen? It's a lot of stuff. Take into account too, probably some continued downgrades to the southern hemisphere crop, and then good daily export sales announcements again on the soybean front. It's volatile. It's big. We've got really high prices. We're encouraging farmers to not dismiss these. Yet at the same time, it's not doesn't take a lot of energy to try and yet be friendly to the market based on what wheat is doing, the war, and then kind of looking at our weather map right here. It's dry in the west and dry in the south.
Very, very true. A lot of things to take into account with these markets. And of course, just picking apart some of these things. Russia, Ukraine obviously is top of mind in the trade right now. We saw Chicago, Kansas City wheat. You mentioned this sharply higher today. Spring wheat kind of faded towards the end of the session, though. And we saw quarter beans lower. I think there's some other storylines to talk about there. But this Russia, Ukraine thing, you alluded as well to Ukrainian crops. Will we see a crop get planted this year? I think that's a big point of discussion. But it just seems like there is no stopping the winter wheat markets right now, just with all of this uncertainty surrounding what's going on in the Black Sea.
Yeah, you've got that as your number one issue. Talked as an example, talked to a producer today. He lives in the panhandle of Texas, and he said he drove to Oklahoma City. So that distance, he said, I never saw a field of wheat that looked good. Um, that's saying something. He said it just doesn't look good. Needs rain. Wheat has 9 lives. Maybe it can look good, but this guy's pretty level-headed. He said just this is a pretty tough looking crop and doesn't think, yeah, it's got record numbers in front of it. So there's that type of fundamental argument behind the marketplace. If we go to the southern hemisphere, FC Stone, private firm, they lowered their uh, crop estimate today, down just a little bit under 122 million metric tons. That's lower than 126 last month, lower than CONAB. So again, supportive news across the board. Soybean oil reaches in the new highs this week. Just really volatile markets. Now, a bit of an anchor on the markets. If you kind of look behind your shoulder, the US dollar has been on the rise and hit its highest level in 18 months. So as the world kind of gets real scared about what's going on, there's a little bit of a flight to safety or flight to the US for now.
Well, you mentioned those private numbers from FC Stone here today as well, and looking at South American weather, looking at the Southern Plains weather, and everything else. Quarter beans, though, we saw a bit of maybe profit taking today. Would you chalk it up to that? Were we just correcting an overbought market a little bit?
I'm going to chalk it up to that today. It was a volatile overnight trade. Several times it rallied and then sort of ran out of gas. So it
Mhm.
just seemed like the bulls could only chase it so far, and there was some selling interest there, or those who maybe want to take some money out of the market. Um, Yet, you look at front month May corn, it finished virtually unchanged, maybe a half cent lower, something like that. So not a huge change there. Interesting though on the wheat. You take a look at the wheat market today, and the old crop contracts limit higher in May Chicago, 74 higher July Chicago. You've got that at the same time, you've got 40 lower on December wheat. So you're talking one day, you're talking a spread of a dollar, what, a dollar 15 ish. And so all of that has major implications that need to be considered or factored in.
Yeah, you mentioned that spread trading. If I'm a farmer right now with these volatile markets and just looking at everything and looking at all the situations in front of me, to me it feels like it could be tough to navigate, but also it almost feels like if you're not doing something to protect some of this great upside that we have, I don't know. It just seems like a question I think needs to be answered there. How much can you really do in these markets to protect yourself and protect some of the downside risks that's out there, Brian?
Sure. Options are pricey, but they're viable tools, and we still have to recognize that they're pricey because you're at such high levels and high prices in high volatility that someone is selling those options. So, take some time to kind of study that. But I look at something like the corn market here, new crop corn, reached the second day in a row through 625 a bushel. When do we not start selling new crop corn? I mean, we can argue about no crop or late crop. Who knows what's going to happen in Ukraine? But why wouldn't we sell, let's say, new crop corn, 625 equivalent on board, hedged to rye, forward contracted, and maybe purchase an out of the money call option that's our safety valve for the next several months, go all the way up to December. That gives you the opportunity to have retained ownership. So if this thing corkscrews and goes to all-time new highs or wherever, you'll be made mostly whole. On the other hand, if we find out that high prices cure high prices through diminished demand, the market starts to trend lower, funds get out, we see some resolution, we expect, normal type crops elsewhere, and we start seeing rain in the US, you can kind of see where all those dots start to connect the other way and the bears come out of the woodwork. So we just need a balance is my point. Look at put options, look at call options, look at good forward sales or hedge to arrives.
Brian, you mentioned the dollar as well, and I know folks are watching the financial markets. I know we had some Fed meetings today. You look at the dollar, you look at the stock market as well. What are your thoughts there and how that's all reacting to everything going on around the globe right now?
Um I think, yeah, the president spoke last night. So let's start with that. He said some things, and um, so we start thinking globally what that might imply or what that could mean. So I before I get to like interest rates and inflation
Mhm.
and those things, it looks like the Fed will be raising rates. That's been expected and looks like that'll be the course. At the same time, you've got energy prices just continuing to zoom higher and this inflationary pressure. I don't know what the cure for that is right now. If we have to go all the way back to the 80s when Reagan really punched interest rates significantly higher or had his Treasury Secretary, or uh, I think it was Paul Volcker at the time. That's how he tried to. So there's just a lot of unanswered questions that I think that this current administration, as well as the world, is really trying to scramble for answers. And we're trying to put some kind of value on what does that really mean for producers. So what it really means is that if you need to finance, get loans, take loan, try and do that sooner than later. There could be several rate hikes this year. It could be a half percentage point this go around or a quarter, but there may be another 3 to 4 in front of this. um, and that's I don't know if that answered your question, but
Mhm.
globally, you've got the entire world sort of looking at dismissing quantitative easing. At the same time, you got some real economic conditions in China that are encouraging quantitative easing and stimulus type package. So it's just a topsy turvy world we're in. Uh, Stay tuned as a producer. Stay tuned to things like what your co-op might be saying. A lot of guys this fall were telling my producers, you're going to see shortages of fertilizer or higher prices.
Mhm.
You know, take them for their word. They're not trying to put a squeeze on you. They're trying to do you a favor.
Very, very true. You mentioned energy prices. We've seen oil skyrocket, 110, $111 a barrel today. We think about spring planting coming up. You guys are going to need gas, going to need diesel, you name it for around the farm. We're watching crude oil continue to rise. I mean, I'm hearing I'm hearing people throw out $140 barrel crude oil. I've heard 170. To me, it feels like nobody really knows where this crude oil market is going to go with all the unknowns right now, Brian.
Well, we're getting to lofty areas, and it reminds me very much of 2008, where we saw crude oil hit $140 a barrel. And, the bulls are in charge right now, and they're buying and they're buying and they're buying and they're buying. So with that crude oil market moving higher, you got to think that's going to bleed back over into the bioenergy sector, back into soybean oil. Ukraine's the world's largest exporter of sunflower oil, which is the fourth largest component of the world vegetable oil classes. So there's just all of these dynamics going on. You've got pent up energy for services and food for people who've been, basically working at home or saving money over the last couple of years, wanting wanting potentially different things to work with. So, as I look at the big picture perspective, we got to just kind of keep all of this balance in mind that the leader of this whole commodity complex in these kind of environments usually is energy, and the grains is wheat, both reaching new highs. So, we're still in bull markets here.
Let's talk livestock a little bit here, Brian, before we run out of time today. And feeder cattle rebound there. I would assume some of that with the lower grain prices, quartered soy today. Live cattle had an okay day, especially the deferred months. As you look at these cattle markets here in this climate that we're in, what are you seeing? Anything stand out to you? Anything that we need to keep an eye on in cattle right now?
Well, I think the feeders kind of hit a level where they became a viable buy. And we continue to hear through the grapevine that there's just limited supply. So there's that. You got this drought out west that's been there for several seasons now. You've got high inputs costs. So yeah, when corn prices slide one way, you're going to probably see feeders, take advantage. And really, corn didn't really fall apart. It was just lower today. Um, but good strong reaction on the feeder front. The live cattle got a little top heavy there. We had this nice head and shoulders formation, a little bit heavy. Weight gain has been excellent. We've heard again, we've mentioned this before, feedlots being able to run cattle through a little faster, but good quality cattle. They're not light. So um, good winter weather. Cattle on feed last week still pointed to ample inventories near term, and that's been kind of the Achilles heel is these cattle have been, well, I'm going to say pulled ahead. Now I say pulled ahead, they're just gaining weight faster, so they're ready to go quicker. Um, Still, I think on the big picture, it's hard not to be supportive. Look where the hog market is. It's continuing to trade at sky high levels. Competing meats, consumers seem to be interested. Exports are good. Um, stay long term supportive. Short term here, might be looking for a point here if you've been defensive April. We talked about puts 2 or 3, 4 weeks ago. Got down to the 200-day moving average today. Think the market's got the lower cuts factored in. Probably look for demand to start to grow here.
And I think as well, you mentioned the hog market a little bit mixed today. We recovered some yesterday after a few days of sell off, but this hog market just, as you said, it's been screaming higher. It doesn't feel like it's gonna run out of steam necessarily anytime soon. It's felt to me like maybe just a bit of a correction and consolidation here. The last few sessions outside of yesterday's turned back higher.
Yeah, well, the world needs protein. It needs meat.
Mhm.
you gotta wonder, China in theory, we've talked about this before, where it looked like when China gets full steam ahead on their uh, production, which they did, then things are going to look pretty bleak for the U.S. producer. That was in theory. What happened is, I think in reality, they pulled ahead, pushed the production, but the input costs got so high that they were losing money. So I think you're seeing where that herd is actually cut back, and that gives a loophole for U.S. exports to remain strong. But China's not the only buyer out there. The world is has an appetite for U.S. products and services, so we're confident that we'll see good export activity continue in the long run there. Probably the market's up the way it is, more of a reflection of disease issues, PRRS in particular. Been a rough winter for a lot of these bigger hog facilities where they've had these issues come in, and it's really probably in the end, you're going to see that we're just down on inventory here in the U.S.
Well, and disease as well. I wonder how much support we'll get in beef and pork markets moving forward with the expansion of avian influenza in the U.S. again. I know we got another case reported in a backyard flock in Iowa today. So
Mm.
continuing to see that expand as well. One has to wonder how that could factor in moving forward if it continues to expand in the U.S., Brian.
Yeah, it continues to add to this whole kind of scary situation, just how we can go from what, kind of business as usual, ample world supplies of most everything several years ago to, kind of getting critically tight to what happens if, we have more cases of this. What happens if your crane can't buy a crop or can't plant a crop? What happens if this war is, longer and drug out and the shipping ports are in jeopardy? All of those things, things you don't think of. So you think, well, the war isn't really going to hit shipping. Well, shipping insurers don't want to insure ships in that region. So they are canceling, or think I've read they're canceling policies or giving notice that a cancellation. They don't want to insure ships that are in harm's way of a war, or maybe they just that's part of the clause. They won't, and then you go uninsured. I mean, all these things that are more questions that you don't normally see in normal times.
Very, very true. Well, Brian, great stuff today as always, and a lot to discuss and think about with our marketing plans. And I know if producers need some advice, they can reach out to you and the team there at Total Farm Marketing and have a conversation, have a good old phone call conversation with you guys to work through some of these things that are going on, can't they?
Oh, they sure can, and, no questions, that's to say, no question's a dumb question. No, any question you have, throw at us. A lot of times we can kinda sift through the chaff pretty quick and help people out. Don't struggle with things. For instance, if you have an idea of how, like, an option works or, a thought on, long-term sales or something like that, we can cut right to it and get at it pretty quick.
You can give them a call, 800-334-9779, or visit them online, totalfarmmarketing.com. With that, Brian Doherty with Total Farm Marketing. Appreciate the time on this Wednesday, sir. Thanks so much. We'll talk to you again soon.
Absolutely. Thank you, Jesse, much appreciated.
Brian Doherty with Total Farm Marketing, our guest today on Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.